Thank you all for attending today's Munch and Learn, whose liability is it anyway? Today I'll be discussing insurance, what coverage you and your company might need, as well as how to ensure your policy protects your business. I had hoped to open with a good insurance joke from the show Whose Line Is It Anyway, but they were few and far between. I guess you could say they were at a premium.
Hmm.
So who am I? I'm Sam Taylor. I'm a chartered insurance broker and I work for Jensen Insurance Brokers. I have nearly a decade of experience, with the vast majority of that time working with innovative companies. I've placed cover in over 20 different countries around the world, from the likes of the US and Germany to the Falkland Islands and Kenya. So there's very few territories in terms of subsidiaries that I've not come across and not placed. Who are Jensen Insurance Brokers? We are one of the largest independent insurance brokers in the UK and now boast over 1,000 staff across the UK and have recently acquired an office in the Republic of Ireland. I'm part of a dedicated technology, media and cyber team where we have the ability to access Lloyd's of London as well as the ability to trade across Europe. Within this team, we have a number of highly experienced professionals and we work with a variety of companies, from startups to multinational publicly traded companies. So, like all good lessons, it's important that we highlight some of the learning outcomes we're looking to address in this session. The key topics I want to help you with is: why does my company need insurance? How does commercial insurance differ from personal insurance? What makes the insurance needs of an innovative company different to a normal company? Why is it important that your insurance policy fits your company? And how are Jensen Insurance Brokers able to assist? So firstly, why would I want insurance? Having spent the best part of the last decade working within the insurance industry, I'm well aware that no one wakes up one day and thinks that they would like to buy some insurance, in the same way that you might fancy a takeaway for dinner tonight or buy a new outfit for a special occasion. Insurance, at the heart of it, is an intangible product, a promise to pay should something go wrong. While you may not view it as a fun purchase, it is there to help you on potentially one of the worst days of your life, when things could quite literally be up in flames. There is a variety of different insurance covers that are available. The terminology can be confusing, and without advice and expertise, it can be easy to purchase the wrong cover and, in the very worst case situations, end up with a very expensive piece of paper rather than an insurance policy. What insurance am I legally required to have? There are only two covers that are legally required for you to have in the UK. The first one is motor insurance. If your company owns any vehicles and they are on the road, they need to have cover for them. While the minimum cover is referred to as RTA cover, Road Traffic Act cover, the majority of people have fully comprehensive cover. This provides cover for damage to your vehicles, as well as any damage to third-party persons or property. Failure to have this usually results in points on your license and a fairly sizable fine. The other legally required cover is employer's liability. This is required for any company with two or more directors, provided they are not married to each other, and as well as if the company have any employees or labour-only subcontractors. Failure to have this can result in fines of £2,500 per day. What insurance am I contractually required to have? While this will vary from company to company, the most common contractual requirements I've found in my experience are as follows: management liability and key life policies. This is especially key if you have external investors. These investors are providing funds and usually stipulate this cover as a means of protecting their investment. Management liability provides cover for the directors of and officers of the company should a claim be made against them in a personal capacity for their actions as the director of the company. This could include matters such as discrimination at work, HSE investigations, and breach of duties. A key life policy provides cover should a nominated individual either die or be seriously injured, and the funds are provided to the company to source their replacements. We've also got professional indemnity cover, which could be required if you're providing any advice to third parties for a fee. This is because professional indemnity cover provides you with cover against claims of errors and omissions that lead to your client having a financial loss. Property insurance could be stipulated if you have goods held in trust or items you've hired. This is cover for these items against an insured peril. This can include things such as fire, theft, and accidental damage. Public liability might be requested if you're attending third-party premises. This is cover for damage to third-party persons or property, usually referred to as slip and trip insurance, in case you go to their premises, slip, trip, and damage something. Cyber liability could also be required if you're accessing third-party computer infrastructure. This is covered for costs related to a cyber attack, whether that's extortion cost, forensic investigations into the source of the attack, or data restoration costs. These can all be covered under the policy. What are good risk management tools to implement? One of the first questions I get asked when I tell people I work within the insurance industry is, how do I make my premium cheaper? While I cannot provide any widespread advice that will save you money with a wave of a magic wand, I did want to provide you with some advice that may help you if you suffered a claim. While every insurer has a different risk appetite, there are some common themes across the market currently. The insurance market is constantly evolving, and while there are no direct correlations between implementing these and a large reduction in your premium, it will definitely help protect your business. First recommendation would be for the company to take time and create a business continuity plan. This plan would outline how the company would cope if you suffered from a serious incident, such as a fire or a cyber attack. Within this plan, it is important for senior leaders to understand what their responsibilities would be, how their team could perform if they're unable to rely on a key facet of the company, whether this is your office location or your cyber infrastructure. Within this, it is important to outline any potential costs, whether this is short-term hiring of office space or costs for managing customer and supplier expectations. It is also important to understand how long you may need to implement this plan for, as it could take weeks, months, or even years for you to be back up to trading at the level you were prior to an attack. By carrying out this exercise, it can help you understand what type of business interruption cover you need, what costs are associated, and what indemnity period you may require. Another good risk management tool is to implement multi-factor authentication. This requires users of a shared area to complete multiple sources of logging in. This provides added protection within your cyber infrastructure as it ensures hackers have to go through further levels of encryption and identity authentication prior to accessing a privileged area. While some of you may feel that your companies have a limited exposure to a cyber attack, recent weeks have shown the impact of a cyber attack on our day-to-day lives, with the likes of Marks and Spencers, Harrods, and Co-op all suffering serious impacts to their trading as a consequence of a supplier having a cyber attack. These cyber criminals tend to be opportunistic with their approach, and rather than simply targeting big-name brands, they target anyone with any vulnerabilities within their cyber defenses. With multi-factor authentication being a fairly low-cost tool and very straightforward to use, this added protection is highly recommended as we see cyber attacks becoming more frequent and more severe. The final recommendation is to check any changes of bank details. Unfortunately, social engineering is still one of the most common forms of theft a company will suffer. This is when a criminal will pose as a trusted third party and send you an invoice with amended bank details for you to settle, usually pressing how urgent and how this needs to be a priority to make you skip steps and settle it in haste. While it is not uncommon for companies to change banks, it is critical that you check these changes. I therefore recommend that should you be notified of any change of bank details, you should use a general office number you have found on Google to call up and verify these details with them, rather than just trusting the number in the signature or that their word is true. So how does commercial insurance differ from personal insurance? For most of us attending the webinar, prior to becoming a company director, your experience relating to purchasing insurance is likely to be limited to purchasing your own personal insurances. This could be travel, home, or car insurance. The way you purchase the insurance is likely through an online platform, and when you go to search for alternative quotes, you're more likely to go through an online aggregator, such as Compare the Market or Go Compare. For commercial insurance, most businesses use an insurance broker. There is a variety of reasons for this, whether this is the need for specialist advice and guidance, the need for specialist insurance providers that only work via an intermediary, or because the company is too large or complex to work via an online aggregator. Obviously, I'm biased as an insurance broker myself, but as insurance is a legal contract and every company is different, I believe it is critical that companies spend due time and care and get quality advice when sourcing their insurance each year. But isn't all insurance the same? Well, the straightforward answer is no. It's not as simple as saying I have commercial insurance and it's applying to all contractual requirements and legal requirements you have. Insurance is a legal contract, and while I appreciate the policy wordings are fairly long and may not be the most engaging documents to read, it is important to understand what your company is covered for, and on the other hand, what you do not have cover for. As an insurance broker, the worst thing I can simply say to my clients is, trust me, it's covered. I believe it's critical to sit down with the director of the company, make sure they understand what cover they're purchasing, why they're purchasing, and what they are covered for. It is this attitude that all insurance is the same that differentiates between a company with an insurance policy and a company with a very expensive piece of paper. What makes the insurance needs of an innovative company different to a normal company? While the definition of a normal company is very difficult, for the sake of this exercise, we will say it's a clerical risk in a well-established profession. Whether this is an accountant, a law firm, or a marketing company, the risks and cover they require tends to be very similar, and they have a number of competitors that work in the same marketplace, and therefore insurers can rely on a long, detailed understanding of the industry, as well as claim patterns to help them make decisions on pricing. An innovative company is generally trying to create a solution to a problem that's not yet been discovered, or create a product that does not yet exist. This presents a unique case of circumstances for insurers to understand, and is the role of a broker to ensure this is portrayed to insurers in the right manner. Unfortunately, I've seen too many examples of companies having patchwork traditional errors and omissions / professional indemnity policies and general liability policies that leave gaps in cover. Due to this, it is important that a company takes the time to complete proposal forms, discuss what they do and what cover they need with their broker, and works with them. It also means taking the time to familiarize yourself with your policies. So if you're unable to comply with any endorsements, you can notify insurers so you can look to amend cover. What are some common errors these companies encounter with their policies? While some of these might seem like somewhat inconsequential, the impact it could have on a claim could be sizable. It's critical that the policy documents are correct, and if they aren't, then speak to your insurer or broker urgently to get them corrected. The insured entity needs to match the company. If you're a limited company, that means it needs to match how you're listed on Companies House to the letter. If you have any subsidiaries, it is important to understand whether you want them to be covered under the policy. We usually recommend that they are. If they're foreign subsidiaries, it's important to understand local legislation that you may need to comply with. This includes covers such as employers' liability, motor insurance, as well as any contractual requirements that may change with territories. For example, in the US, insurers there issue a certificate of insurance referred to as an accord certificate that may be requested and you may require for domestic trade in the US. Due to the nature of the certificate, this cannot be issued from abroad, and you need to structure your coverage so it dovetails with local US cover to get this issued. Another key thing could be insufficient coverage. This can vary from limits of liability that do not comply with contractual requirements to gaps in cover. For example, traditional products liability covers third-party property damage and bodily injury as a result of a product sold. Some companies, particularly those in the tech sector, are not selling a tangible product, but their product is more likely to cause a financial loss for their clients as a consequence of a claim relating to their product rather than property damage. This is where a professional indemnity policy that works alongside the product's liability cover would be critical. Cover for employees away from the premises. While the majority of businesses offer hybrid models for working now, it's important for insurers to understand if you're working in hazardous locations, such as trackside, as well as understand the work that is undertaken there for the cover to be amended accordingly. Well, why do these errors matter? Well, simply, these errors can impact the coverage and any claim settlements. While there are various protections for consumer insurance, a business does not have the same level of protections. The Insurance Act 2015 remains landmark legislation in the matter and moved the onus for companies to provide a fair presentation of risk. This means it is important to outline what you do as a company, but moves the requirement from the insured to provide chapter and verse to making insurers and underwriters responsible of asking relevant questions. If you fail to provide fair presentation of risk, insurers can view this as either a reckless or deliberate misrepresentation of risk and take various views on the policy. Rather than to go into detail of the various options, let's just leave it as it is critical that due time and care goes into the insurance policies each and every year. Insurable interest. This is interest you have in something in order to take out an insurance policy for it. Usually this is financial interest. This is important when holding customer goods, leasing a premises, or importing items from abroad, as it helps establish who is responsible for insuring them. An average condition. This is found in all policy wordings. This highlights the importance of insuring property at the correct value. While insurers will make allowances for certain changes mid-term, so you do not need to update your insurance policy every time you order new items for the business, it is important that the sum insured reflects the assets the company has. It is also important to understand whether the material damage cover provides you with reinstatement or indemnity, as this can impact your settlement. Common areas can include insuring a building for the market value of purchasing the property rather than the rebuild cost, as well as the market value of the computers when cover might be on a new for old basis. The average condition is the condition insurers will apply at claim settlement if you've underinsured your property, and they will reduce that settlement proportionately to that underinsurance. Let's say, for example, you have a building that's rebuild value is £1 million, but you've only insured it for £500,000. You have a loss, whether that is a partial or a complete loss. The insurers are allowed to apply the average condition and therefore reduce the claim settlement by that percentage of underinsurance, which in this example would be 50%. Therefore, this condition is pretty dangerous in terms of underinsurance, and it's important that we get these sums insured correctly. Warranties and conditions precedent. These tend to be found in policy wordings, and they can suspend cover if you fail to comply with them. This means if you breach these conditions, there is no cover in place until this is rectified. It is critical that you notify your insurer if you fail to comply with them as soon as possible, as this could lead to any claims that are made being rejected if you fail to comply with these conditions. So I'm just going to have a quick drink. So what to look for with your insurer and insurance broker? There are a number of things to look out for than simply just opting for the cheapest provider. I'd recommend working with brokers and insurers who understand and are well versed within your industry. That could be using networks such as this one to discuss with others what their experience has been with their insurance brokers. When dealing with insurers, it's also important to see if their policy wording matches with your industry that you work within. With all the companies attending today undertake a wide variety of activities within the rail industry, there will not be a wording that is universally acceptable for all of you. However, common red flags would be if a policy wording is for a trade that is massively different to what you do. Endorsements and conditions are critical, as some insurers have standard endorsements that they apply. For example, Aviva apply an unoccupancy condition to all commercial combined policies with material damage cover, as it is requirements that you need and steps you must take should your premises become unoccupied. It is important that these conditions and endorsements are applicable for your company and you're able to comply with them. If you're unable to, and insurers are unwilling to amend them, then you may not be with the right insurer for your company. So here is a quote I found from the founder of Dell that I believe highlights how all companies do business nowadays. While we all have our primary trade, relationships are just as important. While some people view insurance as a commodity and a transactional relationship, I hope from my presentation today it highlights the importance of having a good relationship with your insurance broker and working with them, as this will lead to the best outcomes for your company. Here's also a testimony from one of my clients. Usually when people talk about insurance, they discuss all the things that have gone wrong, whether that's the price being too high or a claim not being settled in the way they expected. I thought I'd just use this testimony from a client who recently had a sizable claim of about £500,000. With this company, their intellectual property was critical to them being able to trade. And when they had an IP dispute, by having a specialist policy with the right insurer for them, their claim was covered in full and saved their business from likely going bankrupt. So the Johnston proposal. As a special offer for the Rail Innovation Group, we're pleased to offer a free audit of your current insurance program. What we would need is about half an hour of your time, as well as your current insurance documents. We'll then be able to review your documents and make some recommendations to address any gaps in cover you may have and make sure your insurance coverage is as efficient as possible. This audit is completely free and there are no obligations to use our services going forward. So, any questions?
I was just going to say thanks for terrifying people on the call.
I know, it's really hard to talk about insurance without being a little bit doom and gloom, because the only time you use your insurance policy is when something's gone wrong and you've got a claim. And like I said a minute ago, a lot of the time that people talk about insurance, they talk about all the things that have gone wrong, whether that's a claim being rejected or a gap in cover that they didn't know they needed to address. And no one, I think almost the best thing we can say from a lot of our clients and our experience is none of our clients sit there and go, when a claim comes in, they're not sat there going, "Oh, we weren't expecting that outcome. We weren't expecting insurers to say this, or the policy to react in that way." I'm a big believer that education is key with it, and sadly, it might not be the most interesting subject in the world. It can be the difference between supporting and saving your business and not, unfortunately.
Hmm.
So, given that we cover startups and very, very small
Mhm.
companies, what would you say of the proportion of companies that bumble through and don't realize that they need some sort of cover until it's too late?
Startups are sadly the most vulnerable, in my opinion. And there's a few reasons for that. There's the whole we're not trading yet. We're just in R&D. We're just spending time and effort to get these ideas up and running. But unfortunately, as I touched upon earlier in my presentation, if you've got two or more directors and you're not married to each other, legally you do require employers' liability, and the fines can get quite sizable quite quickly. At £2,500 per day, you do not have cover. So that's not to say, okay, we're incorporated on Companies House on the 1st of June, purchase your insurance on 1st of June, we need everything. I think the way insurance, particularly for startups now, is working is similar to a Lego set. Rather than one size fits all, here you go, here's everything. It's we'll build it with you step by step, block by block. And that's where it's really important. Too many times I've seen startups go online and purchase some cover from, and I don't want to throw them under the bus, but someone like a Simply Business. Simply Business had a brilliant trading model. And I met with their head of product a couple of months ago, and we were chatting about this. And I was saying that you're one of my favorite competitors because actually, more often than not, the way a Simply Business policy is structured is not for an innovative company working in cutting edge design, potentially going trackside or doing anything that's to do with national infrastructure. They've got quite a lot of conditions and warranties in their wordings that basically exclude lots of these covers. And therefore, if I see a startup and I've had startups come to me and go, "Oh, we've got an insurance policy. Here you go. It's with Simply Business." Actually, they've not really got an insurance policy. They've got something they can tick on a form, but how it would respond to a serious claim, I, I dread to think really. So that's where working with startups from day one is really important. There are some brilliant insurers out there who've got dedicated schemes for startups that are competitively priced with quality wordings. And that time and effort and energy of engaging with the relevant brokers and the relevant insurers from an early stage is really important. That's not to say there aren't also methods of trading online. If you don't want to work via a broker and you prefer a non-advised basis, there are insurers like Hiscox and Markel who have online platforms for this. However, like I said, it's non-advised. They won't be able to support you in the way that you may need, particularly if you've never gone through this process before.
Hmm, interesting. Ray has joined the call. Ray is just Ray, do you want to introduce yourself?
Yeah, hi everyone. Apologies, I was late. I've been in dealing with a evolving situation in Essex. Yeah, I'm Ray Chapman. I am with Translaunch Metro, which is a multimodal startup. So it's all very interesting. What I was just hearing from you, Sam. I also work on PureJet, which is an aviation startup at one of the major London airports, and Kent Sussex Connect, which is an economic project in the southeast. So hello everyone.
Hi there, good to meet you, Ray.
Nice to meet you, Sam. Yeah.
And Ray's potential solution will include cross-border travel to France, so you need loads of cover.
Mhm.
Yes, absolutely. Yeah. So apologies I couldn't be here for the beginning, but I see it's recorded, so hopefully I can watch it back a bit later today. That'd be wonderful.
Definitely, yeah. And I've got my contact details. So any questions, feel free to drop me a line, give me a call. We've got our website as well, but yeah, it's probably quicker to contact me directly because, like I touched upon, we've got 1,000 employees. It can be a needle in a haystack with the online inquiry forms and things like that.
So I have another question then. Sorry,
Mm.
I'm just going to monopolize the time. Is if you go on to, well, basically anything from the government, there is all these programs and things to support and help small businesses
hmm
get set up, or there's loan schemes, or there's coverage, or anything else. Is what do they do with regard to the insurance?
It varies from where your fund's coming from, to be honest. So if you've got, say, an Innovate UK grant, that can be put towards the insurance costs. Same with a lot of local authority funds, they can be put towards it in the same way that if you're filing for patents, if you've got to do audits for accountancy purposes, this is professional services that can be paid for that. Uh, Again, it depends on the size of the client. Certain insurers do provide other referral sort of discounts. So, like I said, you've got some insurers that do startup schemes, so it's more competitively priced products for small SME startup companies. There can be a case that certain insurers, if you're purchasing cyber insurance, for example, and you're saying, look, we actually want to invest in more cyber infrastructure, more risk management, they can get you preferential rates with some of their approved suppliers. And it works hand in hand. You get a discount on purchasing something that you're probably purchasing anyway, but also insurers look on it favorably. Unfortunately, commercial insurance isn't like motor. You're not going to get a no claims discount, and every year with that claim isn't going to lead to a reduction in price. It's not how it's structured. It's more aligned to your financials as a company, your turnover, your wage roll. But the risk management tools that are in place help us in a negotiation with insurers to work with them. We've seen over the last 5 years a very turbulent insurance market where, unfortunately, most people have got used to the renewal premium come in and the price being 10, 15, 20% higher than last year, regardless of how the company's performed. Thankfully, in the last 6 to 12 months, that market has shifted to being what we refer to as a soft market, where I've actually had meetings with fairly sizable insurers who've sat there and gone, we will not be beaten on price this year. Things like that. And that mentality 2, 3, 4 years ago was completely alien. So again, it's hand in hand. You don't want claims, but also insurance is there for you to claim. They're not a charity, they're a business, but they also expect you to claim. But at the same time, well-run companies, there will always be an appetite in the market for companies that do the right thing and have the right protections in place.
I have a question. Sorry, I was checking if I was on mute or not. In terms of something that's obviously new, the cyber attacks that we're getting, what that's new to me. I used to have my own business, so we had to have insurance. We had to have everything that you spoke about. Back then, this was just before COVID. What is it within the cyber side that is covered?
So a cyber policy can be structured in two ways. So you have what's referred to as first party and third party cyber coverage. So you have first party, which is the cyber costs of an attack on you, and then the third party coverage that is the transmission of that to others, whether that's people in your supply chain or your customers. I think what's quite interesting about this is the M&S attack that's happened recently. They accessed the M&S system for a third party supplier. That was how they accessed it. They didn't attack M&S directly. It was an opportunity. And it's the latest insurance news is saying that that claim is going to be north of £100 million. So with a cyber policy, it's structured in various ways. You have the forensic cost of investigating where this happened, this attack, whether that was a phishing attack. So you or one of your colleagues might have accidentally clicked on a link on a dodgy email. Could be a case that you have a vulnerability within your cyber infrastructure and they've accessed it through a back referred to as a back window of your website, so to speak. You've then got the extortion cost. If they've hacked you and they've gone, hey, we want X amount of Bitcoin for your data back. Insurers legally are not allowed to pay hackers. However, Insurers are allowed to pay you to pay hackers, if that makes sense. So there's the cost related to that. There's the data restoration. You may not want to engage with the hackers, or the hackers may not want to engage with you in terms of an extortion. They might have just hacked it all and deleted all your data, or they've given it back and it's not perfect. Okay, well, if you've got a backup from 24 hours ago, 72 hours ago, whatever, okay, what else do we need to work on with that to restore that data to how you were prior to an attack? There's also the crisis communications and the notifications to regulatory bodies. So, for example, back in November, the ICO actually handed out their first fine for a data processor. Now, under GDPR, a lot of the times it was the people who managed the data that was found to be lacking from the ICO and tended to be fined. This was a private company that had a cyber attack, and about 86,000 personal medical information was leaked to hackers. And one of the key vulnerabilities from that was the lack of cyber infrastructure that this company had in place. They didn't even have MFA, which I touched upon earlier in the presentation as a low cost but positive step. And they were fined £6 million by the ICO as a data processor. That was a total game changer in terms of where limits need to sit for your cyber policy, because cyber policy can pay for regulatory fines, but also the onus and responsibility on companies to ensure they've invested in a cyber infrastructure that is everyone's different definition of good cyber infrastructure. But I touched upon earlier good risk management tool. MFA has become pretty much the same as having an alarm in your house or locks on your front door. It is the cyber equivalent. So yeah.
Thank you. That's a lot of money that was paid out.
Yeah, completely. I mean, thankfully with the M&S £100 million claim, the insurers at Allianz and Beazley, they've both come out publicly and said, we will pay this in full. The co-op though, latest news I've seen this morning, I've not had it verified, is that they've not got adequate cover, and they are likely to be looking at north of £10 million worth of losses relating to the cyber attack.
Ouch.
Well, serious business then.
Definitely. I'm sorry I sound really doom and gloom and scaremongering using these big numbers, but unfortunately these are the threat actors we're dealing with now. I can bore you to death with government statistics and various ransomware calculators on cyber. If you want to have those conversations, I'm happy to pick them up separately. But in my experience, I can think of in the last 10 years, 2 or 3 clients that have had premises burnt down completely. I can think of 2 or 3 clients in the last 6 months of mine that have had cyber attacks. That's the difference.
So, I have a question. People like Alert Logic and Darktrace, that I understand are supposed to be very state-of-the-art cyber security. I'm assuming Marks and Spencers and the Co-op have their kit, and therefore, what's happened to M&S and Co-op and whatever else, the other one, is beyond what Darktrace and Alert Logic or similar sort of organisations provide, isn't it?
So with what they provide is risk management. They're adding a layer of protection. They're providing vulnerability scans, pen testing, things like that. What they don't provide, and the third-party cyber security provider won't provide, is the insurance, the cost relating to the losses the business will encounter should they suffer a cyber attack. What happened with the M&S one was you had a trusted supplier that was breached. So the supplier had gone through all the checks and passed all of the M&S checks, but because they were vulnerable, hackers could easily move between servers and networks and go, oh, we don't need to do anything to hack M&S because we just quite literally have already been approved because we've gone through an authenticated, approved login that was vulnerable. And so think of it like a domino chain. Rather than saying you needed to knock M&S off as the first domino, they actually gained access via a different domino, and then the M&S domino fell afterwards.
Was that an API link to M&S from the other supplier? I'm just thinking, a lot of in the travel industry, transport platforms are integrated by API. So if they, I'm trying to think of a good example. So TUI is a good example, big tour operation. They will integrate to the EasyJet API or Ryanair API through a third party. So if that third party, a bad actor gets into the, I won't name that business because it'd be unfair on that business, and they suddenly get in on the API, and then they're in the TUI system, aren't they? Is that what happened at M&S? Is that kind of the guts of it, or how did it? I mean, what has gone on there?
It's difficult to say for a couple of
Right.
reasons. Firstly, it's not in the public domain,
Right.
and sadly, M&S are not my clients, so I'm not dealing with it firsthand.
Yeah, if it's not in the public domain, it's not in the public domain.
I can speculate that it would either be something like an API or a managed service provider. Someone provides an element of service and they have that access. All we know is that they were pre-approved provider. They had access to the cyber infrastructure, which again limits the number of providers you would probably provide that level of access to. Particularly if it's third party, because an organization the size of M&S is likely to want a certain amount in-house as well. So it's tough to say. I agree. I think API is probably the most likely. An MSP would, in the current market, would be expected to have certain levels of minimum requirements to even to get cover. And MFA would be literally step one on that path. So I would assume it would be that, Ray. But again, I would just be speculating at this point. And when we can sit down and do a full case study and review of what's happened, probably be in year or two's time, I'm sure it will make some fascinating reading for those of us sad enough to find insurance interesting.
Sorry, this is really interesting stuff. Do you remember that incident last year with a big IT firm that caused all the aviation network to go down?
Yeah.
What happened there? And does your insurance cover? Would that cover? I know Heathrow Airport if it happened again. Was that a good example? Because we're a year on from that incident.
So
somebody had,
So that one's quite a difficult one to sit down and just say it's black and white as being covered, because under all insurance policies, you've got various market standard exclusions. So the first one is a war exclusion, but also there is the exclusions related to national infrastructure and sort of not quite, well, it'd be a terror attack or something trying to take down national infrastructure. It's the arguments of Heathrow is part of the national infrastructure, but it's not publicly owned. So it falls into a grey area of what's happened, how's it happened, things like that. So I actually used to have a client of mine that ran an airport down in the Falkland Islands, and the coverage there and the concerns they had there were similar. There's obviously historically been some disputes with Argentina over who owns it. And if something was to happen, particularly relating to air traffic control, communications, and it stemmed from Argentina, would it be classed as a political terror incident? Would it be classed as an act of war? Would it be classed as this? All these things that potentially be excluded on your insurance policy, but you're not doing it to the UK government, you're doing it to a privately owned entity. So I hate to be really grey and woolly and give you a politician answer and say it depends on where you fall and what you're doing and the consequence of it. Because at the end of the day, if it's a terror attack, it's down to the police and the government to deem it to be such. And so if they deem it to be that, if it's an act of war, the UK government self-insures it themselves. You'd be looking to recover costs from that. If it's terrorism, politically activated attack, then a separate terrorism policy would respond. What we've not got to the stage yet is distinguishing cyber terrorism away from it. Obviously, we're starting to see threat actors be established from Eastern Europe, and how the links they have with the likes of North Korea, the Kremlin, etc. No hacker's going to say, by the way, here you go, here's my flag, I'm being paid for by these guys. But yeah, a cyber policy would most likely look to respond unless there was a valid reason from a centralized organization telling them not to respond because there's better responses out there. i.e. the government are paying for it.
Oh, thank you for that.
No worries.
Fascinating. Got any other questions? No. Okay. Well, let's draw this to a close then. That's Sam. Thank you very much.
Well,
And
thank you for having me, and
people can
thank
get
you
in
all
touch
for
with you
attending.
on the email on the screen.
Definitely.
So yes, we'll keep in touch.
Yeah, and I'm on LinkedIn. I constantly
You're
share
everywhere.
bits and pieces of things that I see that are relevant, newsworthy, relating to insurance, particularly cyber insurance. So feel free to connect with me on LinkedIn and stay in touch.
Thanks. Thanks, Sam.
Thank
Brilliant.
you.